What's going on, everybody? Jay Wicker with Real Estate Aholics, man. And as you see, we got one of our members here, man. What's up, Lenny?
What up, Jay?
Not much, man. It's good to see you, brother. Good to see you.
No doubt, man. No doubt. You as well, man. You as well. I see we got a
Absolutely.
new. I see we got a new member down here.
Yes, sir. Mr. Bill Wilton, Wilburn. I'm sorry, Mr. Bill
Yeah,
Wilton. How you doing?
good. We finally got it figured out. I'm in.
Yes, sir. Right on time. We just went live, so we right on time, man. So we got
Perfect.
people still popping in here. Okay, so everybody tell them, what you do, where you logging in from, all that good stuff. Start with you, Lenny.
What, man? What's up, man? My name's Lenny. Actually a buy and hold investor in Springfield, Missouri. I use a lot of exit strategies when it comes to creative options in real estate. I'm a friend. I'm a father, man. I teach people, what they need to know when they need to know it. If you guys ever in Missouri, holla at me.
Absolutely. He's a go getter too, man. He got you all every time I turn on, man, I see you on there doing something, man. You going out there killing it.
Yeah,
What's up,
man.
Jay?
Cold for the
What's
train.
going on, fellas?
Not much, brother. So we you right on time, man. So tell her what's your name, what you're doing, and where you doing it at.
Oh man, Jason Sims. What I'm doing? It's easy to say what I'm not doing. It's wasting time. All right. But wholesaling real estate, creative financing, buy and hold, new construction, doing deals in Texas, Missouri, Georgia, Tennessee, and we're working on trying to get up into the DMV area with DC, Maryland, and Virginia, and of course do a little bit of mentoring and coaching here and there, so we can all get a piece of this money out here.
Absolutely, man. It's out there to be got, man.
No doubt.
So Mr. Bill, it's on you. Tell her where you calling it, where you logging in from, what you do, all that good stuff.
Yeah, San Antonio, Texas. I'm a wholesaler. I own a little company called National Wholesale Realty. We bounce back and forth between national and locally here in San Antonio, and we're mostly going back to our roots, just sticking to wholesaling here in San Antonio. But I wholesale, I rehab. I'm really more into buy and holds. I am more of a deal architect when it comes to bigger deals, but I'm getting more into new construction as well.
Oh, excellent. Right on time, SJ. Tell
What's
me where you
up?
logging in from, what you're doing, all that good stuff. What's up, SJ?
What's going on, peoples? What's going on? What's going on, Jay? What's going on, Bill? Lenny? What's going on, everybody?
What up, God?
Straight out of Jersey, wholesaling real estate, 5 years. That's my thing. Basically, I use the wholesaling capital to be able to buy investment properties. So that's what I do. I always want to make sure that wholesaling is a exit strategy, but it's also a way to wealth. So I teach wholesaling real estate. You can catch me anywhere, S&J Property Group, everywhere, because I'm everywhere.
Dope.
Right?
Hey, but I miss y'all, man. I miss you guys, man.
Yeah.
Oh,
Miss
yeah.
you, brother. What's
It's
up,
been a
Lenny?
little minute,
What's
man.
going on, Lenny? I see you in the clubhouse.
Yeah, Lenny killing in the clubhouse, man.
Yeah, you already know, man. We need to get that. We need to move this over there
Absolutely.
and just
I'm available tomorrow, man, if y'all want to try it.
audience, man.
All right.
The cap. Okay, you said the camp. Okay, no, Jarrell,
Yeah,
man.
I'm here.
Okay,
My camera says it's not working. I'm gonna log off and log back in, but I definitely want to check in while we're doing that. This is Jarrell here, the investors broker coming out of Atlanta, Georgia. I do a little bit of everything, wholesaling, but primarily I get you that money for your deals. I do all type of deals from fix and flips, turnkey purchases on rental properties, portfolio refinances, anything that will serve you and get you to your financial freedom. So just give me a shout out on that email at bpiquickloans@gmail.com, or you can hit me up at 678-523-1300. I'll repeat myself at the end, so make sure you listen to the end and you get that those contact information again.
You hear that professionalism? See that rolling off at the tongue? That's what's up, bro. Absolutely. So if you guys missed that, like you just said, we will reiterate that, man, later on and sometime in the middle and all that good stuff, man. So pay attention, guys. It's going to be some game drop. Now, Mr. Cody, he wasn't able to make it today, man. He said he'll catch us in the next a couple weeks or so. He had another thing he had going on, man. So I was definitely looking forward to hear what he had to do, what he had to say about the syndication. So that's what we're talking about today, guys. Syndication, man.
Right.
What is syndication? What's some pros and cons of syndication? Is it a good thing? Is it a bad thing? All of that stuff, man. So we're gonna kind of jump right into it. We also got a little quick video we're gonna kind of go over as well to kind of as this guy kind of makes some steps, tell us a little bit about syndication. We kind of see what we can do, what we can't do, right? So let's ask the question, man. So what is syndication, man? What is real estate syndication? So what's it? Reg D, 506 non-credited investor. So okay, that's the next question though. I showed that already. So what is that, man? What is syndication? Real estate syndication. And how is it beneficial, man?
Who's up?
Anybody can take it anytime.
All right. I mean, I could go first. I think one of the biggest problems that a lot of us are going to face is people swimming in the wrong circles. And a big part about syndication is making sure people are in the right circles. And I'm talking about private money people, your deal sponsors, the actual investors, the people who are signing their name on the line. And so you want to have the right people for the right thing and people that can actually perform. So you could syndicate with private money. You could syndicate with hard money people. I think right now in this economy, one of the best things that people can do is avoid banks as much as possible. There's so much opportunity with private money and to get people to be passive investors that, especially West Coast, you find yourself some private money on the West Coast, they'll be happy to take 10%. Actually, it's very, very surprising. I think a lot of people get started with this idea of I got to pay 30% to private money people, and they're really taking money out of your pocket for doing a lot of the sweat equity, where they're not making money on crypto right now. They're not making on exchange trade funds or mutual funds or stocks, or they're all the Wild West days of investing are over with. And so best way to make money is to form those relationships and it's really all about the deal, right?
Absolutely. So, quick thing here. So, Sterling, man, if you want to jump on, let me know, man. Let me know, man. Shoot me a text, man. I'll send you the link as well. So, yeah, it's definitely a people business, man. So, you got a lot of people out there that are fakers for sure, but you got a lot of people out there that's actually getting it. So, what do you guys think about syndication, man? What do you guys think it is?
I don't think it's nothing. We just got to put some money in a pot and know how to spend it.
Right. Right.
Absolutely.
Right. Make sure it's the right asset. I had this one individual, one of my good friends did a syndication or jumped into a syndication. It was a great deal. I didn't have the money at the time. I was also, had my money tied up in something else. And it was like 25,000. And she's getting a great return. I think she's getting $853 a month or something like that. So she's getting $853 every month consistently, cash flowing. And sometimes like I said, when you deal with syndications, you gotta make sure the person that's the leader of that knows what they're doing, can be able to get a good deal. The numbers make sense. The return on investment makes sense. Your money's going to be working there. Your money's going to be employees making that money for you. So, it's just, I wish I would have jumped in, but my money was somewhere else, so I couldn't jump in. But the next time that person has another opportunity, I'm definitely going to get into the syndication part. Definitely.
Yeah. So go ahead, Larry.
Yeah,
Lenny, I'm sorry. Go ahead, Lenny.
Yeah, most definitely, man. Shout out to Ben Navarro and Investor Syndicate, man. Those guys are a perfect example of a syndication, right? To where they actually went out, gathered Wall Street hedge funds, gathered territory hedge funds, gathered a whole bunch of private lenders as well, to syndicate it. to where, it brings the new guys. If you don't have, a strong buyers list, you can actually submit your deals, to these syndicated hedge funds and actually get these deals closed at a way higher price than, what you would actually get if you just flat out wholesale to, just say your normal mom and pop, small investor who just do rentals. Those guys pay you a lot more money. So, very, when you find a syndication, and, like the homie was saying, if you can't get in at the ground floor, you're going to regret it, but definitely still get in. Right, because in my opinion, the syndication is a great opportunity. Just like I'm saying, if you don't have a buyer's list and you're just starting, you're able to go through a syndication, submit your deal, and they actually fish that deal around to
Yeah,
the best buyer. So
yeah,
definitely
because
an opportunity.
Lenny's right about that. A lot of these hedge funds a couple of months ago was eating them up, right? They were paying they were paying overpriced, right? They were paying more than normal, right? And then they kind of slowed down, right? Where they wasn't really picking up properties and like they were before, eating it up. But it's gonna go back up. I mean, I think hedge fund
Definitely
is a great. I'm looking for hedge funds in Alabama. If you know any hedge funds, let me know. So
all day.
I'm definitely like, hedge funds are great connectors. And they'll let you know whether you got a good deal or not. So I definitely feel like people who are starting out should definitely, look for those big hedge funds, those people who buy 30, 40, 50 properties. Those are really good. Those are really good to connect and rub shoulders and elbows with, you know what I mean?
Yeah. One thing I would definitely suggest, maybe you guys don't have this problem, but Texas across the board, Austin, Dallas, Houston, San Antonio, we get a lot of these wholesalers that will pose as investment trade fund or hedge fund investors that manage these massive portfolios, but really they're just using that word to get attention. They'll go out there and post something or text something. They're like, I represent this hedge fund, and I got a hedge fund buyer that's looking for this or that, but it's not true. They're just a wholesaler trying to daisy chain. And so one thing I've had to do is ask for proof of funds, ask for some kind of backing to prove that these guys have any gas in the tank and they're not just trying to get your attention and daisy chain.
Yeah, that's important, man. Another thing too, man, you can definitely reach out to some of these REI meetups they have, and go out and actually touch the people who are actually doing it.
Oh yeah, that's huge.
That's like you say, I've had that happen to me as well, dealing with other wholesalers and stuff like that. But if you go to these REI meetings and you see these people up there talking, these people are here. They are already a part of it. They're investing their money. You can talk to these people. You can lay hands on these people. Whether to send your money up to somebody that you don't know who running it or what the deal is, right? I'd rather deal with somebody that I can go and actually touch. Somebody that's in my area. That I can have some coffee with or whatever the case is, man. So, yeah, syndication can be a great thing, but it's important to know the ins and outs of a syndication.
Right.
But yeah, you can just send your money. And if it's a good deal, you're gonna make some money off of it if it's properly ran. But you need to know what you're investing your money into.
Right. Yeah. Speaking of ins and outs, do you guys kind of set a deadline to say like, all right, after 2 years, we're gonna balloon this deal and everybody gets paid, and whoever's really the architect of it or whoever's name is going on that line, they're refinancing for long-term cash flow. Like, let's say you buy a multifamily portfolio or several properties, and your idea is to refinance the bank or the private money partners, cash them all out. Do you guys kind of set a timeline for that on your deals?
Normally 5 years.
5 years?
Yeah, 5 years with an early clause.
I'm trying out my best. I'm trying my best not to balloon anything because I was told balloons are for clowns and clowns balloon in circus. Okay, so I was taught not to balloon anything at all. As long as I can stretch this out, I'm gonna stretch this out.
That's
Stretch this out.
Yeah,
20 years, we're gonna stretch this out for 20 years.
And when
I'm
when
gonna
it
use
comes
that.
yeah, when it comes
Balloons
to
are for clowns.
syndication,
I'm writing that down right now.
yo, Lenny made a good point. You know what I mean? Listen, I've always been in, even with wholesaling with my investment properties, I'm a buy and hold person. I'll hold for as long as I possibly can. If
I'm
I
saying,
don't need to refi, I ain't refining, right? If I'm in a syndication deal, I don't know, as long as the numbers make sense and my ROI is what it is, I'm getting a good return. I'ma hold my money in there and let it work.
yeah.
You don't gotta, as long as you know is the asset is stabilized and it's doing its job, and the person that's you know leading over that asset, property management is in place, everything is good. I'm holding my money in there. Ain't no need for me to nah.
Yeah, and let me be frank. I meant only when the investors are when out. Then you would suggest a time frame for them. When you're requesting funds, you're within the boundaries of how that lender will lend.
Hmm.
You can't make your terms unnegotiable.
Right.
So always first, like Lenny said, try to stretch it out. That doesn't leave you uh to a point where your back's behind, your back is up against the wall at any point. But at the same time, that may be your want as a buyer, as the person doing the whole syndication, to buy these people out, to let them go, to
Exactly.
finance them out. One thing that a lot of my investors do also and this is like a little, it's not for everybody, but a lot of people out here looking for funds, how to do this thing, how to raise capital. The syndication is a wonderful method. When a lot of my investors also refining them out, cashing them out, but also to get them that incentive to loan them the funds, saying even after we cash you out, we're going to still keep you on with a small percentage of
Oh, that's
ownership
smart.
interest into it. So it's you can do 2% where they're just capping, off of a $20,000 building income a month. They're catching a check for 150, 200 on a deal they have nothing into it no more. You know,
Exactly.
and that right there, it gives someone just you
That's
have
where you want to
to
be at.
see. The thing
Exactly.
is the steak. You gotta serve steak. You can't serve hamburger deals. You gotta serve good,
Absolutely.
juicy
Fact.
You
deals.
can't,
Fact.
you can't fall in
Money
love
will
with the.
follow good, juicy deals. People want their money, get paid in monthly cash, soft income, and then also people want to make sure that they're safe.
Yep.
So make sure you're talking to the professionals when you're doing these deals, and you're reaching out to all the necessary professionals to make sure you have this thing not only sounding good, but legally sound, where everything is, and your smart investors are going to be, watching for that,
Yeah.
watching for your knowledge, what you know about the
What
deal.
What's interesting that you said it too. We talk about the being legal, right? The legalities of the situation. So the SEC, why is that important, man? To kind of understand a little bit about that, man. If you plan on doing a syndication deal,
Because the feds are gonna come after you if you're not regulated, buddy.
man,
Yeah.
And if
man.
you're not, and depending on how
That's
much
right.
money is actually being invested by each individual person, if they're not accredited, then you've got an issue.
Yeah. Well, I know you can. I mean, I know you can do a deal like. Well, first of all, I'm not a lawyer. I don't play. I'm not a
Yeah,
lawyer. I don't act like a lawyer. This is entertainment purposes only. Do with this what you will. But hey, we're not telling you to do this. Don't do it. We're not telling you not to do it. Do it, or whatever the case is. Right? We mix that thing up. Take it for what it is. So, but it is a way to do a syndication deal, right? Even if you're not accredited, right?
Yeah.
You can do up to like 35 people or something like that.
Yeah, there's
Right.
people that let's think about let's say like the Tulsa Real Estate Fund or other funds that are out there, right? A lot of them are not accredited, right? Some of them are accredited. They have programs where you got some that are accredited, then you got some that are not, right? But again, the SEC, man, you got to make sure that your books are right I'm telling you, they will come. They will go looking, audit you, all that. So you just got to make sure that the person that you're dealing with is on the up and up. Make sure that that person you know very well as far as what they're doing and what their long-term goal is and all these, because there's a lot of scams, a lot of things going on right now. I don't know if you see it. There's a lot of things going on in this in the media, and so and it's all about people trusting individuals to take their money to make it work for them. And I always say a lot of it is due to ignorance. You know, we are very ignorant when it comes to the whole real estate thing. So it's learning the business, understanding who's going to take your money, because again, there's a lot of scams out here, man. You got to be careful.
Yeah, that's a big part of it. It really, a lot of it has to do with that. It's representation and what you're presenting to the public. And one thing that's always helped me is studying up on Regulation Z. Regulation Z is like the street word for protecting yourself as an investor. And once you cross a line of trading securities or commodities and you're doing that publicly, then it becomes an issue. But if all you're doing is talking about deals and you're just saying, I have a deal, I want to talk about it, you can't cross that line with people that aren't educated on it. So that's why you see a lot of mentorships and a lot of coaches and gurus out there that are, I'm going to teach you about this and this and this and this. They're trying to bring you into that door of educating you on what they're doing. They can't go out there and say you're going to get this much back, this ROI, this this is the turnaround time. You can't advertise that way, but you can advertise your ability to educate people. And once you know that you're talking to somebody that's well versed on it, and they've shown either some kind of track record or understanding or basic understanding of it, then it's just a conversation that you're having with them about the deal. But you're not publicly hurting anything. You're not advertising any securities or commodities. It doesn't have to be registered with the SEC. There is rules specific to how much money you can manage. I think it's like 100,000. Once you go beyond managing 100,000, then you have to register. You have no choice. But if it is, that's for hedge funds. But if it's just you have a deal and you want to get some private money partners and you want to syndicate, you have to basically get their foot in the door and confirm, like, do they know what they're doing? Are they too dangerous for their own good? But yeah, if y'all want to, I'll write that down. Regulation Z, that will protect you. It'll go over all the basics of like what you can and can't advertise about the very, very bare minimums of deals. Because yeah, there's a lot of phonies out there. So
absolutely. So we talked about the accredited, right? Accredited investors and non-accredited investors. So how do you know if what are some of the things you must meet to be an accredited investor?
I think our lender friend, Lenny.
Jarrell, are you there?
I'm sorry. What you say? I was on text.
What are the things you have to meet in order to become a accredited investor? How much money do you need to make? Yeah.
Well, none of my investors are accredited. So so I deal typically in like you said, 100, 150 per deal. Syndications, you don't need necessarily, it's about how you're doing it. Funding, running a fund is a totally different deal than actually getting private money together from 2 individuals. I don't know too much about 35. Facebook user. I don't have his name here, but he said 506B. You can have up to 35 unaccredited investors. That's called 5. Yeah. So it's typically on the deal size is what you would look at as far as how much money you're trying to raise. If you're trying to raise millions, then yes, you're going to be looked at by the SEC because you are actually managing people's funds that's not in use, that's not actually being used. So if the funds are going from their account into a transaction, isn't quite the same as tied up as being accredited investor. So Jay may know a little bit about this. I'm sure he's dealt with maybe a little bit more of like apartment syndications. That's when those type of deals are in play, or needed. Yeah. You're doing commercial syndication, basically for commercial buildings.
So basically, you have to make over a couple of $100,000.
Yeah.
And you have to make it over a certain period of time and expect it to continue on making it. If you're married, you got to make over $300,000, right? So they're looking for people who are sophisticated, right? Somebody who knows about the business, not somebody who maybe got a little maybe got a little money, or somebody inherited a little money or whatever. All of a sudden, throw it into something. They don't know what they're doing. If they lose it, they're gonna be devastated, right? Normally, an investor, somebody who's actually done a deal or know a little bit about it, if he loses money, of course he's not gonna be happy about it. But at least he know what he lost his money on, and it was part of his fault if he didn't do it due diligence. Mm-hmm. Right now, when it comes to the non-credit investors, it's basically like normally when you do like a non-credit investor, you want to get like a small multi-family property or something like that, right? And it's still just like what Bill was talking about. You still can't advertise it like, "Hey, I got the super hot deal." It has to be somebody you know, maybe a family member, or maybe let's say we put together some money. We've been connecting for some time now, right? We know each other outside of this or whatever case. We talk to each other on the phone, so that'll be somebody that you can probably reach out to in order to do those kind of small deals, right? But the max is 35.
35.
Right, so I got to look that up. With the guy said that the Reg B or something like that. So I got to look that up. So, but that's good to know. So a person just waking up can say, you know what, I'm gonna start doing syndication. Nah, man, you don't want to get raked to the coals dealing with SEC. You don't want that smoke. You do not want that smoke. All right. So okay, we got a Facebook guy person said, I wish I could see his name here. It's a 506C. No non-credit investors and unlimited amount of credit investors, right? So that's a 506C. And then he did another one. He said 250 single and 300,000 couples. So it's a little higher than I thought. So 250, a year, and 300,000. So if I'm not mistaken, you have to be registered. If I'm not mistaken, right? Mm-hmm. In order to be considered a credit investor. So here's the question: why would a person want to deal with a person who's not accredited when there's so many people out there that are accredited? Why would they even want to do that?
I would say they want to go outside of their wheelhouse. A lot of these hedge funds have a specific wheelhouse that they're going to mess with only these kind of deals where maybe you might find something in Texas that was hit by a hurricane or something, there may be a little bit more flexibility.
Yeah.
Maybe longer term loans as well.
Yeah. Outside, you find the things that the big banks or big like the hedge funds won't touch. Not saying they're more risk necessarily. Just hey, they're making money on inside their box, and that's what they're sticking to. That's where my niche is at, actually finding all the boxes and being able to get you inside of one. Instead of because not every lender is the same. Not every they're all qualifications and or parameters or what's permissible or prohibited in a loan or in the properties. It varies from lender to lender, definitely.
So if you're getting ready to invest into a syndication deal, when can you think you can start to getting paid off this deal? If it's a deal that start producing money immediately.
Oh, it could take a year. It could take a year, 2, 3, 4. It could take a while. Definitely could take a while because remember they got to stabilize that asset.
Absolutely.
Right. That stabilization. Absolutely. They got to put property management. They got to do all these things, and they let you know exactly. Normally turnovers would be like I would say 3 to 5 years. Right.
But do you only get paid when it's stabilized, right?
Yeah, that's the thing about it because like a lot of I know people that's doing preferred interest.
Yes, that's
right. Okay, I get that
for their investors. So like as long as operating expenses are taken care of, they're getting paid a certain percentage, 7, 8, 9, whatever
their preferred is.
Yeah,
Absolutely.
before the investor is getting his cut that month.
Right. No, exactly. So
yeah,
it's not going to be a quick turnaround. It takes a while. It takes
you'll get that small payment before you can actually receive your full money back. That can take a while. You know, that's you have to stabilize it. You have to be able to either make those increases in rents to be able to refi at a higher valuation.
Yeah.
And understanding how to do all that, how to value your property based off of income, because that's how these properties are valued. Unlike residential properties, basically, this value is not off of the market value, but your properties that we're speaking about are valued off of the income, off of the income. So understanding that and knowing how to offer that piece of the pie to someone, and understanding your numbers, because that's the thing. You can get 10 wrong and be paying somebody and not making any profit yourself. You sign that document, you sign that paper, not understanding really all your cost. So
but also it can be truly a passive investment, right? If you're that type of person who want to put some money into a deal like that, it depends on how you come in, right?
That's that
truly passive.
That's that drip everybody's talking about.
Yeah, man. You get paid quarterly, annually, or whatever the case is. So,
you get your 24.
Like I was saying, like I'm not
just dripping. You dripping.
My advice, has always been like, you gotta entice people to lend, man. People not lending on your dreams; they're lending to get paid. That's it. So you can't dangle your dream in front of them like, hey, you'll get a piece of this one day. You got to be able to slice that pie up to where you can accomplish your goal, but also other people, you bring value to people. So structuring deals in that regard will land you, because I'm sure we on this podcast we'll reach more individuals that will love to raise money than lend money. It's just fact. So I'm always trying to show people how to attract that capital. And often I see people are just, a little bit too tight. And rarely do I see people say, hey, and then run from the, I'll pay 20 points. If someone tell you that, I'll pay, like if someone says, hey, I'll pay 20 points for your loan or something like that. That's a scam,
That's a scam written all over it.
Can't feel someone that's too generous. And then, of course, then you can't be the investor that's giving tight deals to your investors.
Now, Terrell, you just touched on points real quick. For somebody that's new, that's watching, don't really know what's going on with the money. Could you let them know what those points? You know what I'm saying?
Points are just
points are.
Yeah. See, we confuse people when we say points. All right, points is a percentage. That's it. It's a 1%. 1 point is 1%. So basically, if you're loaning someone 500,000, right? And they say they're going to pay 18 points, because that's what they're posting. I want 500,000. I'm going to pay you 18 points on that. That's 90 grand.
Oh, wow.
Ain't nobody going to pay you 90 grand in points for 500 grand. Don't even contact that person. You see what I'm saying? That's all I was saying, is that when someone, you see a post out there where people say they want to, they give all type of interest is so high. You gotta look out for that. But then also, I'm speaking to people that's actually trying to get capital. You can't keep all the money to yourself. Also, where you're trying to get someone to give you a loan at 2% interest, 3% interest. It's not going to happen.
So what our Facebook, somebody on Facebook said, you want to make sure your underwriting is on point.
Yep.
So that's very important, man. And any deal you do, but especially syndication, right? You also, let me see, we bring this up here. You said, before we get into our video, syndication and your deal correctly and your numbers are on point, you can start seeing a passive income the first year going on every year afterwards. So that's true. And he said,
that's the most important thing. I mean, like here, I'm sure you guys have this experience too. You get your pro forma numbers, and they're always pro forma because you don't ever get the real numbers when they send you financials. Whenever I get financials, it's really like, it's not like, how off is it compared to my numbers? It's more like, how much are these people lying to me? The owners of these, the sellers. So you're like, I'll run my numbers based on the market and what I know market rates are going. And you can say easily 50% of the income on a property, if it's not stabilized, if it's 80 to 90% occupancy, 50% is going to your expenses, your debt services and everything. So a stabilized property, B class, you're probably going to be closer to like 30% in terms of your NOI, your net operating income. But yeah, easily just take your gross rents, divide that by 2. That's your NOI. But yeah, everybody lies on their financials. You got to run your own numbers.
Absolutely.
And
but I usually put 55. So you do 50%.
I do 50%. You're smart for 55. That's a great negotiating tactic to just. I'm pretty solid at 50%, but 55 is good too.
Yeah. But I mean, so okay. This is what somebody said here. Hold on, let's introduce Miss Deborah. How you doing, Miss Deborah V?
Hey, how are you?
I'm doing great. Welcome back. All right. So somebody said, never run your numbers when you perform numbers. I do. I use that against them though. I know.
Okay, yeah.
I know the numbers are fugazi. Don't get me wrong, right? But I use those numbers again. So based on the numbers that you gave me on your performer, this is what it should be. And I break everything.
Pro forma is just Latin for made up numbers. I
definitely agree.
We all know what that is. It's just it's like your argument versus theirs. Unless you get bank statements, you get rent rolls, T12, you get all the work orders, you're not going to get the truth of the situation.
Yeah.
But see,
I get what you're saying.
The number one rules, right? What I'm hearing from real estate brokers is that nobody gets back to them. Once they send out a performer or whatever, you never hear back from the people. So it's a way that we can quickly use these numbers, knowing that this is fugazi, right? This is not going to be it. And so when I do get the financials, I go and say, okay, you told me based on original, this is what it's going to be, but based on what I'm seeing now, I can't give you what you're asking for. I got to give you what it's actually performing, and then there we go. So now they see within 15 minutes, I got the offer back. Say it again. I'm sorry.
That's even in submitting offers, and buying properties, anything that you didn't disclose to me originally, shoot, I'm gonna look at it as double that. I'm gonna put my numbers on it, and then my time to deal with it on it. So you should have just came up with that. Tell me the fixtures don't work. All that doesn't work, because tell me, and give me a realistic number on how much to get repaired. Because if it's when I check into it and I find out it's more, I'm gonna show you my number that I'm gonna get charged to get it fixed or whatever, or do it, and it's gonna be a little bit extra, because
that's our job to draw that out of them, especially as wholesalers, right? We have to be great listeners. I know we got a point we're trying to get out, trying to get out, but if you're a great listener, you can close a lot of deals.
It's all the same thing. Looking for money, looking for a deal, looking for wholesale deals, all the same tactics.
Boots on the ground is so important for that purpose. One of my first apartment deals I did, it was like a little 28 unit here in San Antonio, and the guy was like, it's 98% occupied, and I asked all the questions I could to get whatever documentation I could, but he wanted his $50,000 non-refundable deposit, and none of the numbers were matching up to get the NOI. And he's like, well, you didn't account for a vacancy. And I'm like, that doesn't make sense. You said it's 100% occupied. So I took a drive out there at 5 o'clock in the afternoon. There was nobody in the parking lot. There were no cars at all. And people started coming out of the apartments, and they were like, are you the new owners? I'm like, not yet. And I was like, what's the story on this place? The guy says it's 100% occupied. They're like, no, this is maybe half.
but see, even even if it's 100% occupied, see, to me, there's no such thing as 100% occupied when you talk about commercial, because people are constantly moving. So I'm already deducting 10% off top.
Right.
You know what I'm saying? So it's automatically coming off the top. So let's do this. We're gonna go over a video real quick here. By my guy here. He's gonna talk a little bit about. Say it again.
We gotta introduce Deborah. She came in
yes.
while we were talking.
Yes, Miss Deborah. How are you today? We just rolling. Go ahead, introduce yourself. Introduce yourself, where you're logging in from, what you do, all that good stuff.
Oh, hi. Okay. Hello, everybody. So I'm Deborah Vick, and I am a realtor. I do commercial and residential, and knee deep in a commercial right now. So excuse me for being late. And I'm just here to chime in where I can and learn where I can as well.
Excellent. Welcome. So we're gonna jump right into this thing here. This guy here, we did go over this, me and Cody last week, but it was a different part of this guy video, man. But he's really good. When I pull him up, you guys are probably gonna be like, okay, I know who that is. So let me pull him up real quick, if I can do it. Let me see here. Where we at? Here we go. So this is my guy. He's from Property Advisors. Let me know if you guys can see him.
Yep.
And I'll give his name here in a minute too.
This is the guy that did commercials for dummies. I know this dude.
Yep. He got quite a few books. He's all over YouTube, man. Yeah. But the way he breaks it down, bro, is easy to digest. Yeah. You know. So he's gonna go over kind of what syndication is. Then later on, we'll go back over it. He's gonna go over an actual deal, like how he structured the deal. It's gonna be great. So I'm gonna hit click here, man. If you guys want to, you can jump on mute for a second. Once it's over, we'll kind of talk about what he touched on. All right. Let me know if you guys can hear this. Can you guys hear this?
No.
Okay.
Can't hear it.
It looks like it might be muted at the bottom there.
Okay. Hold on one second. Set notifications. Allow. Okay, let me know if you guys can hear it now. Still can't hear it?
No.
It would do this to me. Give me 1 second. Give me 1 second. Let me do this, man. I had it set up and everything, man. Okay. So what we'll do, let's go ahead and keep going up. I'm gonna fix it as we go, man. So let me get off this real quick here. We had stop. We'll get back on it. So so he's gonna talk a little bit about about syndication, a couple of deals that he has as well. One of them that he's doing, man, I think is phenomenal the way he makes some money on this deal. So if any of you guys don't know, kind of ins and out of syndication, you pull this guy up, man. He breaks it down, man.
What's his name?
Let me see here. His name is man, yeah. It rolls. Man, I don't know why I can't remember his name, man.
Can't think of his name.
Yeah, it's really easy, bro. To be honest with you, let me see. What is this guy's name, man? Let me see here. I listen to him all the time.
Why are you not the landlord?
Yeah, that's him. That's him too. You know exactly. But he would property, commercial properties.
Yeah.
And
CPA. That's name.
Yeah. So his name was not even on the video, man. I don't know why it's not, but I'll put it up here in a second while we talking. So, all right. So let me get back to the questions here.
I'm gonna look it up for you.
Okay, look it up for me, man. Let me get back to the question. So we talk about truly passive, right? We talk about syndication, and how that can be important, man. If you got a nice little stash or whatever you want to put into some investment properties, man. So what are some ways that we can run across some people who are actually doing it? We talk a little bit about that. REI meetups. Go ahead.
Just ask some people.
Ask some people, man. That's out here doing it.
Yeah,
there's tons of people who are actually out here
do it old school like I used to do, man, and go hang out at the Bass Pro Shop back there where the boats, because everybody that's back there buying boats got money. That's what I did.
Yeah. So definitely meetups. You know what I mean?
Yeah.
I feel like that's the most
Peter
important
Harris.
because you
Peter
know
Harris. Yeah,
Peter
that's the man.
you
Harris.
know that's the most important because that's where you can actually shake hands and the one thing I noticed that people do, especially with the newbies, especially new wholesalers and people trying to get into this game, is that when they go to these meetups, they just sit all the way in the back and they don't do nothing. Like you got to get up and pass out you got to be interactive, right? There's so many people in that meetup. It's like there's so much money in meetups, right? Um, cash buyers, lenders, private money people. So yeah, real estate meetups are great, but you got to work that room.
Yeah,
Yeah. Yeah.
yeah. You can't
I mean,
just go
one,
there and buy a plate of food and
what,
eat and then listen to everybody, and go home.
Yeah,
No,
I never understood that. Like
yeah.
you
I
just
like
look. Yeah, go
I
ahead.
like meetups where you can actually do networking though. There's a lot of groups sometimes I think they're lacking. They just get up and they start the meeting and talk, and then at the end they talk for so long everyone's ready to go. There's no, if anyone's in there in out there is want to even be interested in hosting meetups in your future, think about always incorporating a networking segment to that meetup, because a lot of people there to get information, but also to to go back and forth with people and ideas, on a sidebar. You know.
Yeah, I just recently came back from a convention, a single family, multi-family convention. It was an all dayer from 9 to 5, and it was in New Jersey, and it had vendors, it had every possible person there that does real estate. I mean, from 9 to 5. I mean, it had different rooms of if you want to learn about house hacking, if you want to learn about oh man. So being in that space is so important because you know you can find those people that you can say, listen, why I'm not working with you? Like if I'm meeting, why are we not working together? So it was just amazing. It was an amazing convention. It was like from the whole day. It was great.
Yeah, yeah. You find some good leads there.
Let's try
what's
this
the,
one more time. Let's try this one more time, and let me know if you guys can hear this. I don't know what's going on, but you guys hear that?
Nah.
Nah, it's not working. It's not
I'm
working.
losing battery real
Okay.
quick, guys.
Okay.
I may have to plug in and get back logged in here.
Okay. All right, man. My bad, man. For some reason, it was just working a second ago. It just stopped working. So we'll keep rolling. But that's definitely important, man. So syndication is definitely it's a lot of money in syndication, man. I remember years ago, man. I said, look at these apartment complexes or look at these big old office buildings and stuff like that. Not, I'm thinking there's one person to own it, right? This dude got a lot of money, but no, it's just a group of people coming
Mhm.
together, man. Raising some funds and buying these different properties, man, and killing it, putting a management team in place, um, and basically meeting together probably every month or every quarter, whatever the case is, breaking up that money and everybody going on with their life. So that's important, man. So we talked a bit about the passive investing, man. What about the cash flow, man? Did we talk about that a little bit?
Okay.
We touched on that a little bit, right? The cash flow.
Well, I think we having a system breakdown.
Oh, yeah. Okay. Everybody's off with me.
No, I'm here. I'm out.
Oh,
I don't know why
yeah.
my camera's not working. That's
Okay.
crazy.
Yeah.
Saying it's not found. That's crazy.
Do you have to have a lot of money to invest in these type of deals?
Uh, I mean, it depends on how much capital is needing to be raised. As your guy, wasn't it? We just say Peter Harris. He
Yes.
teaches raising double
Yes.
than
Yes.
what you
That's
actually
where I got
raise.
that from Peter
Yeah,
Harris. You're right.
yeah. I think I saw what you saw probably. He preaches. He teaches to raise double because you're dealing with like he
People.
like says individuals and
Yeah, man.
people
Yeah.
change their mind. People things come up.
Things happen.
People
You're right. Right.
people need their funds. People were on the fence, whatever.
Yeah.
So that amount if you raise double, will, kind of come back down to what you actually need theoretically. So it depends if how much you're looking for. I mean, apartment buildings, you could be raising $1 million, so you may need three or 4 or 5 different individuals, or maybe even up to 10, raising 100,000 a piece, and making sure that that your all your costs of that purchase and getting it tied up in under contract. I mean, purchase is taken care of. That's all basically. So it just really depends on the deal size, because you can easily get away with 2 on certain deals and their liquidity, and then other deals you definitely going to have to go digging for a few.
Absolutely, if not more than that, So, Miss Deborah, I got a question for you. So, you've been a commercial realtor. When you out searching for these properties, are you dealing with a lot of people, or are you just dealing with one person, or how are you doing that? Like far as I say, the person reach out to you, they want to buy a commercial property. Are you dealing with like a group of people? They ask me questions, or is it primarily one person?
It depends if they have a high cash flow themselves and they're buying it for themselves. But if they are a group of investors, I'll all of them and provide them with a snapshot of what it will look like from start to finish.
Mm-hmm.
So normally, if the capital is built between, so I have one gentleman who they build a lot, and so they will sit with me and then talk about. I'll have a main point person that I work with. He does a lot of restaurants here in the city, like club restaurants, and so he's like the point person for. I find it, and then he brings it back to them, and then they say, "Go ahead."
Yeah, I like dealing with point people.
Yep.
Yeah, because I mean, I don't mind holding conversations to get the meat of everything handled and discussed on a weekly basis, or even daily basis. But as far as my requests for documentation or returns or call to actions, I want to make sure I got one person that is delivering that to the team. And normally it's the person that has the most experience, because it's be or in that field. If there's multiple investors, not everyone that's investing in property in that group may be in real estate full time. It may be their first or second deal. So they normally will partner with someone that has that experience that they are raising capital with or going after a property with. And that person would be the kind of, like you said, the point person to make sure that all the information and things are handled on the buying side. Because it's a process. It's not just, most times you're not buying a property in 2 days. If you're getting a loan, then it's going to take several or a couple of weeks to get processed and underwritten. So they definitely have a lot of going back and forth going.
Correct. And the person that normally does it isn't the same person that the person I'm speaking to is telling the person to send me the paperwork. So they're normally not the same people. So I work with the person that's going to get everything executed, but they're not actually doing the actual work. They're more the person that's like, let me get, this individual send it to you. And if else, CC me on that email. And that usually works best for me.
Yeah, I try to create group chains, or I ask them maybe create an email address that they both have access to, something like that, to just make sure that everyone's on the same page moving forward. But I'm not speaking that, on 5 different phone calls and 5 different ears on 5 different times in the day, speaking to all the partners. That's kind of cumbersome.
So, what do you see your buyers pursuing right now? What kind of units are you doing? Mixed units or just residential properties, or what are you looking to see?
Typically, I'll be honest, bulk of my deals are just residential. Definitely multifamily, but I haven't seen too many, 24. Normally, small, under 4 to 8 units. So typically, it's like maybe a couple partners in a building, in a company buying that property, pooling their funds together in their company account. Yeah. What about yourself, Deborah?
Yeah.
I have a little bit of everything. I have a funeral home, like a mortuary, embalming is what it's called. That one I had to learn a lot. That was a learning curve for me. And actually seeing the bodies and stuff, I was like, oh,
Yeah.
Oh wow.
Imagine.
Oh wow.
the way the place smells is
Oh, no thanks.
very. It was
But that's when you become a passive investor, though, right? Because we all got to go one day. So here's my money. Call me, you know. 'Cause, hey, you ain't going out of business, right?
right.
You
Well, the
never going out of business.
that the gentleman met me, I've only worked with his partner, and she would do all the things, but then he would come and see the facility, and he came right after like working on some bodies, and I was like, oh, so you came straight from work? And he was like, yeah.
Wow.
Hmm.
Wow. That's something.
For all of the stuff that goes in the drains, I was like, the stuff, and I was like, you know what?
Ooh.
I got to learn this because I need to know what I need to be asking, Now, old liquor store ended up working out because they have all those refrigerated areas where the drains are already built in. And
Wow.
so it was like trying to get creative with the thinking of what would work. And because they have liquor, they had a private entrance as well, where the bodies could go.
Wow.
Just you just gotta get creative. But I have a yoga studio, I have a restaurant, and I have a multi-unit, and then I have
How many units?
they aren't sure yet. They just
Okay.
have a price point that they want to stay within. And then I just had someone who flipped one of their properties and did really well on it because it was pretty much paid off. And so now he's like, what can I do with this money? And I said, well, let me look at what's available, what can be passive that you don't feel like you're, spending all your time on it. So, but I mean, multi-units are very hard to find right now.
You ever think about
Yeah.
you ever think about introducing him to private lending?
So,
Get his loan secured by real estate.
So, for some people, they're trying to hurry up and buy something because of the tax implications. So, in order to
he's
do,
trying to buy something.
1031.
Yep, the 1031 exchange, and so sometimes they're to do, like they want to use that money. They need that loss, and so, I'm trying to find creative ways in which I can show them different opportunities. And I have a person that does the 1031 exchange, and she's phenomenal. And so she usually tells them, hey, this is what your time frame is going to look like. This is your parameter, and this is how much you need to spend. And so that way they know. And so he has multiple rental properties in a different state that he's and bring it over.
Gotcha.
Yeah.
Okay, dope, man. So let's jump right into this thing, man. So,
Good.
What is the limited partner (LP)? What is that?
I don't know the difference between LP. Anyone knows that? What's that?
The limited partnership.
Yeah,
limited partner. They just they're not into the day-to-day. They're not like a GP where they handle the operations and all that. They just put their money in. They don't have any kind of business on the day-to-day. They're totally separate.
Yeah, absolutely.
Then when you have a GP, is different. And you're part of the organization. You're part of the operations. You manage the money, the asset. Everything is basically on you. But there are more LPs than there are GPs, right? So that's exactly what it's basically about.
Yeah. So LP, that's that, totally that passive we talked about. Just put your money in there, and you're not the one that's going to fly out to make sure this is happening and all that type of stuff. No, you're not doing that at all. So like you said, you need the LPs as well. So we did touch on the GPs, man. So what is that again? What's the GP? Not God's property, not Kurt Franklin. What's the GP?
You're so crazy. It's those people who deal with the like I said, the operation part of it.
Yeah.
They are the ones that handle the asset, manage the asset.
Yeah.
They basic day-to-day of the asset is on them. They make sure everything is great, stabilized, money wise. They do all the front end work. Right.
Absolutely.
They're the
So
proxy for all the LPs.
Yeah. Yeah.
absolutely.
Yeah.
So they may be the person who does the hiring for the
They do
management
everything,
company.
man. They're the
Yeah, they
gopher.
do the whole nine.
Uh-huh.
They're the
Yeah,
gopher.
that's
Okay.
that's a great place to be, I would say.
Oh yeah.
I mean,
Be a
so
gopher.
if I'm so let's say if you are getting into let's say real estate syndication and you really don't have any money, but you understand what a good deal looks like, that's your way in. So your thing now is to get out there to try to shake some trees, to do what you got to do to find a good deal. You go ahead and pre-underwrite that thing, get everything lined up, negotiate yourself an equity position, right? So and there you are, you're a part of that, right? So you get in that position and you want to see everything, you want to see how this whole thing flows, right? So that way you can learn on the job, and hopefully you
Absolutely.
got somebody who knows what's going on, so you can kind of piggyback on their experience or whatever. But that's your way in, So
Absolutely.
it's a
Yep.
great place to be. Great place to be.
You know where the best place is to find people like that if you don't want to do it?
What's that?
LinkedIn.
Yeah.
So it's a great place. Break that down to a Jay. Would you say a great place to be to do what now?
To find people like that. If you don't want to do it, that's the best place to find people like that is on LinkedIn. You will find a lot of your retired or semi-retired people who have run syndicates as well as Wall Street and investment firms,
Mm-hmm.
and they're still looking to still be in the business, but they don't want to have a whole lot of hands-on. If they want to start small, then they can help you out to do it.
I mean, there's a lot of folks in my world that have plenty of money and have no experience, and then there's folks that are equity rich and cash poor that want to be a part of the deal, and they just don't understand how they can do cross collateral lending to get their foot in the door. And if you can find yourself like a grassroots property manager, district manager that wants to get their foot in the door, wants to kind of help you self manage, because one of the most powerful things that you can do is to teach your management how to manage your property. I mean, every property is different. It could be across the street from a fantastic property, and then you have like a 2.5 rating, which I've seen them, especially here in Texas, and you got to work for that 2.5 rating, on Yelp. But they have them out there. It's just like I walked a property recently where I was shopping it as a potential renter, and I wanted to see what that experience was like. And I called ahead of time and said, "Hey, I want to check out apartments. I want to check out all your floor plans. I'm getting divorced. I may have roommates. I may have, my kids stay over." And I showed up on site, and even though I called ahead of time, the girl was like, "Well, my assistant's out to lunch, so come back in an hour and we could show it to you." And I'm like, "I called ahead of time. This is why I called." And she was like, "Sorry, I can't help you." And back in my day when I ran properties, I would close the office and rent my apartments. Like, you got to do what it takes to fill that place up, and
Absolutely.
you're posting ads out on Craigslist, you're taking flyers to banks, you're doing whatever it takes to fill that unit up. And if it has bad management to begin with, you're the one who has to go in there and be the general manager, and being a good manager means playing the guitar string through and through. You're not just doing maintenance. You're not just doing retentions and leasing and your books. You're doing all of it. You're wearing every hat, and you have to teach your management company how to operate that specific property.
That's what they call a drop the mic moment. What you just said, guys. It's important to do that.
Yep.
It's important. It's important because every management company can't manage every particular property a certain kind of way, right? They'll probably may be a little bit different. So yeah, if like I had a guy said, if he wants to open up a store, he needs to make sure that he runs the cash register first before he hires somebody to do that, because you need to know if you're getting beat or not, right? So you need to, go touch these people. And if you're starting out as a syndicator or just getting into it, start smaller so it can be easier for you to manage.
Oh,
Instead
that's
of trying to get
100%.
Yeah.
I mean, everybody's focused on the macro and not the micro. They want big picture thoughts, but they're not. You got to slice the lemons. You got to have somebody up front to greet the guests, and take care of your maintenance staff, get your bills paid. So.
Yeah.
So one of the questions that Ms. Deborah, I had a question for you. The people that you're servicing right now, are they looking for like 100 units, or are they touching the 20 units?
It just, I mean, most of the people that I work with, they have a lot of liquid, but they have no idea what to do with it. So I pretty much,
That's a beautiful thing.
I,
It definitely is.
I correct. So I usually have individuals that I know that have things, and so I'll talk to them. So one, I have someone who is he's in like the music industry, and he does like big clubs and stuff, and so he doesn't have a budget, and he's just like, I need more stuff, basically, and I'm like, okay, well, find you some more stuff, and
Absolutely.
so that's normally how it works. I have only one person that I know for sure that is a very experienced investor. And normally they're just trying to get money from me so I can they're crowdfunding,
Yeah.
so they want me to be a limited partner. But I did that before, and I talked about that on a previous podcast where I lost 6 figures. So I'm slowing down. I'm building, I'm going to do another investment, but I'm wondering if I just want to do it on my own instead of doing it with someone else.
Yeah.
Yeah. So.
So now we talked about the LP and the general partner. So
Mm-hmm.
LP, they get paid after the
Mm-hmm.
preferred interest that the GP is supposed to get, or whatever the case is, right? So that may be 70-30 after that. It may be 80-20, whatever you negotiate. So you get your money after everybody get paid, then you get your money.
Mm-hmm.
That's how that goes, right? So it's important to know that. So you need to make sure it's a solid deal, or potentially go make some good money. So the only way you're gonna know that is by doing your own due diligence. Understand what you're investing your money into. Somebody tell you, hey, it's a good deal, just invest your money. You need to run. You need to run it so fast, right? Get away from them people.
That's right.
All right. So now, well, one more thing too. So I know when I'm reaching out to some realtors, a lot of realtors don't want to deal with commercial properties that's maybe 25 units or anything under 50 from my experience, right? Because most people who are looking to get these commercial deals, they're looking around 75 to 100, so they can put a management team in place to where they can be kind of passive a little bit, or whatever the case is. So anything under, I say 20, I think it's a sweet spot. You know what I'm saying? It's a little hard to get it now because everybody's trying to get in the game, but it's kind of a sweet spot if you're willing to manage it yourself. So I would say try to get it, somewhere where you can keep your eyes on it, not too far away. And if you're gonna get it far away, maybe have a tenant kind of watching over some stuff. But you need to manage that tenant or manage whoever you put in place. So you can make sure, take what they say, maybe it's face value, but check again. You know what I'm saying? Because this is where your money is at. So now here's the question: how do you find a commercial deal? If you try to get in this game with no money, and you try to maybe do a syndication, what are some of the things we can do in order to find some good deals to possibly to feed them to these guys who are doing syndication deals?
I listen. I got a deal right now. I'm working with a realtor. It's a 17 unit here in Jersey. And we work with each other. I don't like wholesalers should be working with real estate agents. Like,
I agree.
And like I don't understand the disagreements. But listen,
You got to train them though.
I work with
you. Got to train them, bro.
Listen, value for value. I got that. So again, I got this deal that I got the 17 unit in East Orange. Where I'm working, I'm getting the finance. Should be getting the financials. The seller wants to wait a little bit because he got 2 people in there that's not paying rent or something like that. So he wants to do the eviction notice or eviction process, whatever. But I got that through an agent. So yeah, mix and mingle with agents. Okay, provide value with value. There's a benefit in dealing with agents, and there's also a benefit dealing with what I do, which is wholesaling. So
everyone is a resource in my opinion. I mean,
yeah, absolutely.
I get deals from my clients, from wholesalers that need to get someone funded for a wholesale deal. From always, I mean, I have a rolling contact with several realtors that need to get their clients funded. even closing attorneys that get that, because I mean, if it comes up that hey, we don't have financing yet, that person that you gain a relationship with can refer you. They don't have a realtor yet, can refer you. I don't have a property yet, can refer you as a wholesaler. I have money, but I don't have any deal, can refer you as someone that's trying to set up a syndication deal. So definitely always speak with people about what are you doing? What are you actively doing? What's your specialty? Because it's just waiting for that to come up in their conversation where they can, oh, I know someone that can help me out or help you out with this right now. And that's how real estate is. That's how really, I know a lot of people pound the dirt. We all do for leads and everything. We all do, but being out there and outgoing can definitely get you business and deals or leads or whatever organically, just by picking up the phone and also this right here, you know, whenever you have someone interested in learning a little bit more about what you're doing, speak to them, you know, share the knowledge. That way that person, I mean, for instance, a realtor said this to me. I'm calling you to get this deal for my client because when I spoke to you, I think it was like 6 months ago, you were so informative. You took the time to tell me everything about that I need to know. And here you are. Here's a loan. So that's what I meant out. And I didn't know 6 months ago that was. I don't remember. I probably was just running my mouth, trying to pass on a little bit of nuggets that someone gave to me. You know, honestly. You know?
Man, we live in weird times. I would almost, in the past, I would never suggest looking on the market or talking to realtors in the past. Nowadays, we're in such weird times that there are so many deals on the market that are hanging there. They're either selling them at a loss or the sellers are just delusional, which I'm sure all of us are having to deal with that. Especially they're hanging on to their retirement, or they overshot their budget and they're like, I just have to try to make this money back and I'm going to sit on the market for 6 months and hope for the best. So yeah, on the market is a great opportunity. And just, you know, it's crazy. I've had money partners come to me and say, you know, we should be getting things at 50 cents on the dollar. And they're right. And the moment you ask a seller, how much do you want? Offer them half and just see what they say. It's crazy. Like in the last 2 weeks, I've walked probably a dozen properties. And by the time I get down to the bare bones brass tacks, these are the numbers. Like 99% of the time, my numbers are half of what they were asking. It's crazy. I would go after city liens. That's huge. I don't know if it's the same thing in y'all's county, but here in Texas and San Antonio, we have one of the most comprehensive county clerk websites where you could search for liens that the city places on properties. Look for the worst of the worst, for dangerous premises, things like that. And if you have industry standard software, like talk to apartment locators because they're a huge resource. They have things like smart locating, which is they blew up. Smart locating is like the industry standard for what apartment locators are using. And you can ask apartment locators, what's on your blacklist? What apartments are not paying their bills right now? And those are the ones you want to go after. And then there's apartment data services, which is huge also. I think they're nationwide. Have you guys heard of apartment data services?
I never heard of that before.
They're like an analog version, like real, like it looks like their website was created in the 1990s, the database, but it's real. It'll give you everything you need as far as who's managing it, who owns it, what's their mailing address, like the owner, actual owner, floor plans, price per square footage, all that stuff. It's just not CoStar. CoStar is like what's the market saying, but apartment data services is like what's the front end of that looking like what is the market analysis going to look like? Look for the like 80% and below occupancy levels. If you can get with an apartment locator and data mine that, like look for the worst of the worst. You know, I like what you were saying, 20 units or 50 units, what's your buy box look like? To me personally, if it needs more than a 50% rehab, I'm not going to touch it. I mean, I already have too many chefs in the kitchen if there's just more than me. So, you know, I don't know about you guys. I don't want 5 chefs in the kitchen. And if it needs more than 50% rehab, I'm not going to touch it. But look for areas where there's going to be growth. Like you're in Georgia, right?
I'm in Dallas.
I'm in
You're
Georgia.
in Dallas?
Oh yeah, I'm in Dallas, but Jarrell is in Georgia.
No, you're in Georgia. So like, are you near Atlanta?
Yep. South.
Okay, so like your hot markets are going to be Lithonia, Noonan, Decatur, Macon. You know, the outer municipalities are going to be where your growth is going to be. Georgia's prices are so crazy, right? Like it's been crazy.
That's why you said all the. If you notice, all the areas he just mentioned was outside of Atlanta.
Exactly. Like those areas are where you can go after. But like Macon, there is neighborhoods full of squatters where they're stealing electricity and the houses are just packed full of lead-based paint and asbestos. And they have like that 30 blighted and white project by the mayor where they were knocking down 30 houses per month because they're just so far gone. And these markets where they're just like, we're going to take them back and just sell them at auction and just start over. You know, like you can go and buy a school in Macon and turn that into an apartment complex, you know? Look for where there's going to be growth. Like what you were saying, as far as your commercial deals and this guy in the music industry, where you can start an Art Deco district or put in the nightlife. That's where you start, where there's like nothing, and then like an Art Deco district goes in where you get nightlife in there, and it'll blow up. It'll change the entire like area. Another thing I would say is look for Section 8. Section 8 that's not owned by the city, because the city will never sell it. It's just a tax haven. But if you look for non-government based subsidized housing for Section 8, that's a huge value add when it comes to like just instant equity, just taking care of the property, because they just normally hemorrhage. They don't put any of that money back. And then another way to find a deal is watch the news. Look for apartment fires. Look for the shootings, people running into the apartments. Yeah. So those are just some ideas of how you guys can find some deals.
Okay, so part of mine is, man, I go after brokers sometimes. So I go to this site right here, right, and I know that there's no deals on it, but what I'm trying to do is build relationships, right? So I will reach out. So let's say LoopNet. So I go to LoopNet. So everything on LoopNet is not a good deal. Nothing, pretty much nothing's on LoopNet is a good deal, right? It's all been picked through. So what I'm after is not this deal. I'm going after the broker. So I'm calling the broker up, right? He said, hey, man, I see you got a property on such and such street, but what I'm after is this kind of property, 20 unit, and I'm giving my spiel, right? And do you run across properties like that? Well, yeah, I do sometime, man. I tell you what, let me get you, here's my number, give me a call. And what I'm hoping for is maybe 30 days from now, because a lot of brokers don't like to deal with the small units or whatever the case is, he give me a call. We just got something that came across my desk, man. Are you still interested? That's what I'm looking for. Right, so I'm doing some of the things you guys are doing. We have software that we use and stuff like that as well. But I'm doing a lot of stuff like this, especially in areas that I normally don't be in. So I'm just kind of pulling them up and just giving these brokers a call. So Deborah, she's the person I reach out to. You know what I'm saying? So
sorry to interrupt. Expired listings are huge as well as to that effect.
Expired listings, definitely.
It's huge.
Definitely.
So let's talk to the broker in this situation. What do you think, Ms. Deborah? What do you think is the best way to go about doing that? So if we're investors and we're looking to find some great deals. What do you suggest? What do you think?
I loved everything that Bill said. I mean, oh my God, like all of that was good.
He's on point.
It's outside the box and it's creative. And I had a huge network when I started in real estate. And so I didn't have to really search. It was kind of like a referral thing. I bartended for years. So I was already connected in that music world. I helped people with back in the day when they did those CDs. And so I was already part of that world. So I just kind of just said, hey, you already trust me for this or for this. So trust me over here too. But if I didn't have such a strong referral base, I would do all of these things. And I love LoopNet. LoopNet is one of my best friends. I don't pay for CoStar because it's way too expensive. But I do have a colleague that lets me use his password. And so I think that that's good. I love the apartment. I actually pay for one of the apartment locators, even though I don't use it. I just pay for it, just in case. And then I like the idea of watching the news because I think that's a creative means. So
Absolutely.
Have you ever used RPR before?
No.
Oh my God, I love RPR. You should check it out. It's like I went to go meet Christina and Tariq one time in Vegas for this networking event, and I asked them what's the best way to determine growth and declines in markets across the board, like nationally. And they were like, use common sense. And I was like, okay, that's literally the answer you could give to any question. But like after that meeting, as soon as I got home, I started doing research and I found RPR. It's Realtor Property Resource. That is like every wholesaler should use that. Every investor should use that. It gives you maps to see what the market's doing as far as growth and declines, like how many deals are on the market, what's the list price, how many deals are hanging on the market. The maps are super cool, but it gives you a way to run comps without all of the bells and whistles of MLS.
I like that.
Yeah,
I'm looking at it right now. Yeah, I see.
Yeah,
RPR.
Yeah, you'll love it. It's the coolest. I'm dead in the water if I lose access to that.
My wife's a realtor, but definitely all the data crunching I can get, because MLS only does so much. That's but yeah, that's what's up.
Is it RPR real estate?
Yeah, Realtor Property Resource.
Yeah.
Okay, so this is right here. Okay, so let me show y'all what he's talking about here. Yeah, I'm gonna definitely look this up.
Someone on the call next time that's an inspector that actually inspects large apartments. I think he will be.
Yeah, definitely. That'd be pretty cool. So this is what you're talking about here, right, Mr. Bill?
Yeah, that's it. That's just like MLS on the go. You can see all the owner information. It actually shows you mortgage information, a lot of public information. If you're working nationally, one of the best things you could do is look at the color coding of the map, the heat maps. Just punch in an address when you're in there, and you can see where deals are hanging on the market, where the growth and declines are. And I mean, it's great. It gives you a lot of under the hood stuff.
Can you guys hear this?
I heard something.
Still can't you can't hear, huh?
Yeah.
Okay. Yeah, I don't know what's going on. I might just break everything down and restart the computer, but it was working a second ago, man. I had everything.
My laptop says I have no camera anymore, so I know what you mean. Like,
I had it all set up, man. It was the whole thing was gonna flow. I tell you, it was gonna be a hell of a show. So, but that's okay. That's nice. I'm gonna go ahead and save this, man. I'm gonna dive in this tomorrow for sure. See what's going on with this, man. But I mean, everybody has some great points, man. Everybody has some great points, but. So in this commercial arena, so okay, we'd be remiss not to say, okay, what is a good deal then? So we talked about what is syndication. We talked about LP. We talked about GP. Talked about all that stuff. How you can make money passive, all that good stuff. So what does a good deal look like? All right, what does the good deal look like? So now I know Bill said anything 50%.
Well, for me,
rock with it.
That's more of a buy box, but to me, like you get 3 cards. You get buy and holds, you get cash flowing deals, and you get flips. And if you can get something that gives you every exit strategy possible and you can bat for the fence, that's what you should go for. I mean, you don't want to buy something that you just say the only option here is to make money over time. That just really limits you, and the more risk that goes along with that, the odds are against you. You know,
or a deal that says, my after repair value is it's not that much where I only can sell it. I can't keep it. I mean, it can go both ways, it's just, and the market's the market, but your negotiating skills and sticking to your guns is something you
Yeah,
have control.
and being able to turn away and just
Fall in
ship
love with
that briefcase full of cash, you know?
Yeah,
fall in love with the deal, not the property. That's
yeah.
Yeah,
important. Fall in
Now,
love with the deal.
is countless times I tell people don't buy this property, don't do this deal.
Yeah.
Uh, it's countless times because not every deal that you find or every lead that you come across that you got the person on the phone is going to be a profitable deal.
yeah,
Sometimes it takes time to bring that seller back down to earth about what if you give him or sign onto that contract um, for too much, then you took away your equity.
yeah.
Um,
I mean, once you pull that trigger on an offer, there's no unpulling it. You already put that idea in that seller's head. I mean, I had a deal I was negotiating on a couple weeks ago, south of downtown here, and it has a building on it that just needs to be demolished. And the guy was dead set on 575. That's what he's taking for it. He thinks the building's going to be worth about 1.2, 1.5, something like that after the fact. Really, commercial real estate is based on what can you rent it for, what can you lease that spot for. So
Right.
we went in between 30 to 60%, or I'm sorry, 30 to 60 cents a square foot, and it's going to cost you whatever it's going to cost to put a building there. But at the end of the day, what can you rent it out for?
yeah,
That's going to determine it. I came back half was what I needed to get it for. But it was too late. I already put the idea in the guy's head. I was like, yeah, sure, I'll do the 575. It sounded awesome. I had all these ideas of what I was going to build and getting my GCs in line and getting my engineers ready to go. But once I ran numbers, I got on CoStar. I was like, oh no, I made a horrible mistake, and there was no
yeah,
coming back.
yeah. You can
Wow.
definitely. And then what you want to do? Oh, I'm not at 575. I'm actually at 380. What? You go look at you like, wait a second. So the only way to really avoid that, and I'm sure you know this, Bill, now is it's okay to say I get back with you.
Yeah. Yeah. Well,
Yes,
all of my
I,
team now, my acquisition managers, I'm training on what we call the 12-step strategy, which is take 12 opportunities to get the seller to tell us their asking price first.
yes,
And by like the 12th time, if they don't come up with a number, they don't show us their cards first, we have to be ready to pull the trigger on the most accurate number. But
yes.
most of the time now, I'm finding the magic number is half.
if you don't offer a low amount and you don't offend them, you didn't offer low enough, and you possibly left money on the table. Right?
Yeah, that's
You
a
don't want to
great
leave nothing on
point.
the table. Right? So you want to try to go as low as you can, especially if you won't put the offer out there, man. Like you got the property, you know what you want for it. Tell me what you want for it. We'll go
Yeah,
from there.
Yeah,
But you know how it is. He who put the money on the table first is the one that loses.
and
So
then
he
also,
knows that he's an investor.
a lot of times, or a lot of cases, the seller needs a certain amount
That's
for
true.
payoff. For
That's
payoff,
true.
you know, and you can't make his problem, her problem, your problem. You give them that money, now you're upside down in your equity,
You're
or
the same
or
situation
your
he was in.
strategies. Yeah, so
Yeah.
I like that whole point of researching the
yeah,
existing mortgage, even if you're just looking at the original balance. You can look at the time since the mortgage was taken out and get an idea of how much has been paid off on it. Or you can or you can at least bring that new knowledge to the seller and ask that directly. Well, how much do you owe on it? Because sometimes people want to. Everyone's trying to make as much as they can. Let's get real. If someone owes 250, they want to sell it for 3 something because they want at least 50,000.
yeah.
So
And
then you bring with knowing how much they owe and all the deficiencies in the property, you can bring them down to earth. Where, hey, I'm about to just save you from having this be foreclosed on your credit, or whatever the situation is, rather than you walking away with a bag also. And
yeah,
then
even the bank wants to get their money. I have a situation right now where I'm helping an investor out. He's facing foreclosure. He took it down to the studs, overshot his budget. It's a massive property that doesn't belong there. It's like 2,700 square feet in a neighborhood full of 1,500 square footers. And yeah, and it's in a great location. But he came back to me. We were going to do a sub-2 on a hard money deal, believe that or not, but just to save this guy. And he did one of the worst things that you could do as an investor. I did it. A lot of investors do. You just don't make a decision and stick with it when you're already facing loss. Just move on. Like, you've already backed yourself into a corner. You got to make a decision, stick with it. So now we have to have that terrible conversation of, I got to go to your bank and explain to them that when they foreclose on you, they're not going to get as much money as what I'm going to offer them. And so we need to have that short sale conversation.
Yeah. Mm-hmm. That's true.
Yeah,
man. Man, this has been very informative, man. So let me say one more thing too. So when it comes to small multifamily properties, one of the things, man, I that really kind of brings value that I see is you can add, instead of doing a syndication deal, you can possibly do a master lease option on it. So that way you find your property that's at a 50% occupied and still be able to possibly do the deal. You know what I'm saying? Because you're not really putting a lot of money into the deal if you do a master lease option. But that's the thought.
Yeah, different strategies.
Yeah, different strategies. So, but man, this is huge. So everybody that's listening, I know it's going to people listen later. We got we're on Facebook, we're on a lot of different platforms. Look these guys up, man. You guys have deals where they're located at. Definitely reach out to everybody, man. And let them know you seen them on the podcast. To keep going, man. Y'all did a great job. So let's end this thing, man. Tell them where you're located at. Tell them what you're looking for and how they can get in contact with you. Social media handles, all that good stuff.
All right. Well, as promised,
this hour 30 minutes went by fast, man. Yeah. Wow. Go ahead. Go.
As promised, is the contact information again, BPI Quick Loans at Gmail. Hit me up on the phone at 678-523-1300. You're looking for a loan for a fix and flip, rental property, or refinance. We're doing 85% of the purchase price, 100% of the renovations on the fix and flips, 75 to 80% on the refinances, and 75% on the turnkey rental. So just hit me up. Thanks.
Absolutely. All right, Mr. Bills, on you.
Yeah, you can check out my website, nationalwholesalerealty.com. We also are collaborators working towards JVing with other groups. You can go to nationalwholesaleregistry.com. They both have the office line and my email address on there. I hope you guys raise private money. I hope you spend it. I hope you analyze your deals, or if you want to JV on something, or if you want to break ground doing new construction, or if you're just getting started wholesaling, whatever. We're a company that's built to work with other wholesalers that want to make a name for themselves.
Absolutely. We definitely be reaching out to you too, man. Welcome to your new member to the team, man. Great information. Ms. Deborah, no problem. Tell them where you're located at. See you out there doing some walking.
Yeah. So I'm Deborah. I am at deborah.vick@garygreen.com. It looks like my camera may be a little dirty. And if you need anything or if you have any questions, I'm here to answer them, whether it's residential or commercial.
Do you have an open house late? You got another open house pretty soon?
Yes, I have a couple listings, so I'll be doing some open houses for those as well.
You doing something this weekend?
Potentially.
Okay, let me know. Man, show everybody what you're doing down there.
Yes, absolutely. I'd love to do a live.
Absolutely. Hey man, salute to you guys. If you guys have something that you guys want to talk about next week or next 2, we do it every other week. Let me know. Shoot me an email. We'll talk about that and we'll dive into this thing, man. So, all right. Cool. Salute to you guys, man.
All right. Y'all have a great night.
Guys, have a good one. Have a great one. Peace. Appreciate you, Jake.
Yeah, man. I was saying salutations. I didn't realize I was on mute still. I was
great info, man.
Yeah. That was what's up. That was what's up. Hey, I gotta take this call. Someone just hit me up.
Okay, bro. We'll holler at you later. Peace.
All right, peace.